Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 2nd of May 2020, and we're publishing our gold and silver weekly update for the week ending the 1st of May. Gold fell $27 last week from $1,729 to $1,702, having hit a high of $1,729 and a low of $1,671. A fall of 1.6%. In sterling terms, gold finished the week at £1,362. That's down £35. And in euros, it closed at €1,549. That's down €48. Silver fell 28 cents, from $15.28 to $15, having hit a high of $15.53 and a low of $14.76. A fall of 1.8%. In sterling terms, it closed at £12 and a penny. That's down 34 pence. And in euros, it closed at €13.65. That's down 0.47 euros. The gold to silver ratio rose slightly from 113 to 1 to 113.5 to 1. The Dow Jones closed on Friday at 23,723, down 622 points on the day, and down 52 points on the week. The S&P 500 closed at 2,830. That was down 81 points on the day and down 6 points on the week. And the Nasdaq closed at 8,604, 284 points down on the day and down 34 points on the week. So as far as the week was concerned, although very marginally down, there was very little difference between opening and closing prices. Now Brent crude closed at $26.44. That's up $5 on the week. And WTI crude closed at $19.78. That's up $2.84 on the week. The dollar index stands at 99.07. That's down 1.31 points on the week and well below the 100 level, which it has meandered at for some considerable time. Now, in last week's update, we pointed out that gold suffered a degree of exhaustion, but the momentum was still up, and that pullback should be seen as an opportunity to buy for the short to medium term. Well, we received such a pullback this past week almost from the start, with gold continuing its loss of steam, reviving again when Thursday's weekly jobless figures came out, then falling quite heavily on Friday, staging then a modest recovery towards the end of trading. Now, what actually happened on Friday, which touched its week's low at 1671, was that the US ISM manufacturing report, although hitting a 10-year low, was much better than expectations, which analysts were expecting to see fall to 35. But the April PMI registered 41.5%, albeit admittedly down 7.6% from the March reading of 49.1. The US dollar fell slightly too thereafter, thereby causing a slight recovery in prices towards the end. So you had this large dip and then a modest recovery. Now, looking at the technicals, short-term momentum has turned negative as the fast stochastic generated a crossover sell signal. The fast stochastic is in fact 62, coming down from 81 2 days ago, which reflects accelerating negative momentum. And the MACD index generated a crossover sell signal. Now, last week we suggested a period of consolidation, and we still hold to this view, with gold prices likely to vacillate next week between around $1,650 to $1,750, eventually attempting to reach $1,800, but we don't think that's going to happen next week. Now, that said, from a technical point of view, the uptrend may be seen to have changed, especially should gold fall back to and below $1,600. Now, we don't actually see that happening next week, but if it does, then the bull trend will have reversed. Though frankly, we would not be selling any of our gold for some considerable time. For much of the week, silver actually performed better than gold until another 4 million plus were added to the unemployment claims announced on Thursday, and then silver took quite a beating, falling from 15.53 to 14.86 on Thursday, and then down again to $14.76 on Friday, but staging a late recovery to $15 by the end of the day. Our predictions for last week appear to be pretty much spot on, where we quoted, "It certainly appears at present that $15 represents a core price level, with oscillations between $14.50 and $15.50. We also last week criticised those who were advocating that one should be buying up as much silver as they could, regardless of premiums. And isn't it interesting that premiums are now beginning to fall again? And all of a sudden, these drastic silver shortages seem to be gradually eroding, with more silver coins now becoming available amongst dealers. Who could have believed it? Yes, we're being sarcastic, because not only did we believe it, but we predicted it, and you will see these premiums over time fall even further. We shall be very interested in going through all those videos of those who predicted enormous rises in the price of silver because of these shortages. Just wait for that moment. The 50-day EMA rests at $15.55, and silver has surpassed this level a few times. We're still of the opinion that allowing for, say, a $1.50 weekly spread, we shall see silver move between $14.50 and $16 into next week, with above $15 likely to be the majority of the day's closures. Now, last week we pointed out that there was a considerable amount of economic data to be taken into account, and we've covered much of this in the previous videos we've produced during the week. So if we take a look at this week's up-and-coming economic news, on Monday we have the factory orders for March, Tuesday trade deficit for March, the market services PMI for April, and the ISM non-manufacturing index for April. On Wednesday we have the ADP employment report for April, which will act as a guide for Friday's non-farm payrolls. Thursday we have initial weekly jobless claims, watch out for that one, productivity for quarter one, and unit labour costs for quarter one. And then on Friday, big day, non-farm payrolls for April, unemployment rate for April, average hourly earnings for April, and also wholesale inventories for March. So another week of important data announcements, with all eyes on employment or unemployment figures Wednesday, Thursday and Friday. Now last week, both the Fed and the European Central Bank announced no changes in their base rates, but both made it very clear to the markets that they will basically do whatever is necessary to keep their respective economies afloat. It certainly looks as if, until global trade starts to pick up again, there is going to be virtually unlimited levels of stimulus. As we've said many times before, and in fact as far back as late 2017, early 2018, because we started producing videos on these then, the prospect of MMT, modern monetary theory, being introduced may now at last be upon us. What we shall be witnessing, which goes beyond normal quantitative easing, is a concerted effort from both monetary and fiscal elements of the economic society and government to act in unison, encouraging copious amounts of government spending to literally buy one's way out of a global recession. This, we believe, will certainly work in the short to medium term. The issue, however, is, of course, will this then result in rampant inflation or hyperinflation? Time will undoubtedly tell, and it is then, in our view and assessment, when we have that rampant inflation or hyperinflation, that we shall witness the real skyrocketing rise in precious metal prices. But we still believe that is some time to come before that actually occurs. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting, of course, that we update our Richard and Greg channel every few days, and we have published a video that we recorded yesterday on that channel today. Trust and hope that you have an enjoyable and safe weekend and week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.